Okay. Good morning, good afternoon, good evening, good night, depending where you're joining us from the world. And welcome to another expert event here at Breakout Solutions. As you guys probably already know, we have Bill Davis with us today, who's an expert in the banking world. So Bill is a successful businessman that has a rich history in real estate, banking, and the Federal Reserve. Amongst Bill's accomplishments are developing over 2,600 plus residential properties. He was a division vice president at Mercury and Loans Association and United States National Bank, where he oversaw bank mergers and acquisitions, secondary market, loan origination, escrow payments, as well as being associated representative to the board of directors. Bill was also a federal bank examiner, Office of the Controller of the Currency, so that's the OCC, where he performed examinations of independent banks and large branch banking systems for compliance, efficiency, solvency, and earnings. He was also part of the first elite team of examiners specializing in examination, resolution, and/or sales or merger of troubled institutions to larger banks. Bill has also served as the president and chairman of the board of Infragard, a partnership between the Federal Bureau of Investigation, FBI, and members of the private sector for the protection of US critical infrastructure, where he liaised with 84 chapter presidents and over 50,000 members to improve efficiency and compliance. So welcome, Bill. I think a lot of people are excited. We've got some more people coming in. I'm just going to let them in. I think a lot of our members have been excited to hear what you've got to say. We do have some questions for you. And yes, guys, you can ask questions at the end. We will have a bit of a Q&A at the end, so feel free to either put your questions in the chat or put it or just wait to the end. So again, thank you very much for attending, Bill. Why don't you give us a little bit of background about you and your career and how you got into banking?
Let's see. First of all, after hearing that introduction, I'm going to ask for a raise in my weekly allowance from my wife, because obviously she doesn't appreciate all that.
Yeah, mate.
Thank you.
Sorry to interrupt.
Thank you guys so much.
Sorry to interrupt, Bill, but your camera's a little bit high. We can't see your face. If you're just trying to fix the camera a little bit, that's much better. Yeah, thank you.
Okay. That may have been a good thing, Wasim.
Well, sort of for your wife if you like to get a raise.
My wife maintains that I can't be serious for more than about 60 seconds at a time. I'll try to clean up my act here tonight. Well, probably the most important thing is not on that resume, and thank you so much for that, and welcome all of you. And I look forward to it at some time somewhere in the world, sometime in the future. We all get together and get to meet and have a pint or whatever it is you guys call it over there, and exchange stories. But as I said, what's not on my resume is the part that I'm most proud of, is that I had an opportunity after I got out of high school. I took a different career path than most of my graduating class. They went on to college. I chose not to. My love of my life at that time was building and racing race cars. And then after I was kind of taking a break from that, I had an opportunity through a friend to do a contract with the Air Force overseas teaching water safety. As I mentioned to Wasim, that's really a fancy name for being a lifeguard for pilots but the good thing that came out of that, we were over in Tokyo, Japan, is I met my wife, and that's the best part that's not on the resume. And we met in 1958. We married in 1960. We have 2 gorgeous daughters and 3 gorgeous granddaughters, all that are incredibly smarter than I am. And when I never, ever win any arguments around my household, not ever. So, but from there, then I came back to the States, and she wasn't crazy about a guy that was building and racing race cars. So I went 180 degrees in the other direction. And I met a friend of mine, kind of an acquaintance, one night. And he asked me, he said, Bill, do you own a suit? And I said, yeah, as a matter of fact, broad, smiling big. I just had 3 custom-made suits in Tokyo, Japan. And I was wondering where, he said, well, why don't you throw one of them on there and come in and see me Monday morning. And he was the bank vice president. And that was the beginning of my banking career in late 1958. And I kind of worked my way through the different areas of responsibility, moved down to Southern California to go to work for the Bank of America program. And then from there, I was offered an opportunity to help start a new independent bank in Orange County, California. And then from there, unfortunately, we had one of our senior employees in that independent bank, after we got it up and going, that decided he wanted to play in the cookie jar and take bank money and depositors' money. And that's not a very good practice. And unfortunately, I found it. And as a result, the examiners came in and offered me a job. And I wound up going to work for a division of the U.S. Treasury Department, which is called the Office of the Controller of the Currency, which is affectionately referred to as the OCC back here. And what I did there was, my first part of that career with the OCC was, I was in charge of the national banks in California, Hawaii, and Nevada. And then later on, they formed a special unit that specialized in problem banks. And our job was to go in, identify the problem, which is usually management, fix the problem, and or we would sell it to a larger bank. And then my team would handle the merger and acquisition. Most of the problems were centered in real estate. And so I fell in love with real estate. I understood the leverage in banking, but I didn't realize it in real estate. But then I learned it. And so for the next 20 years, I was a real estate developer in Southern California and developed, I think, 34 different subdivisions in various communities in Southern California. And I love doing that. I love creating things. And then I had a daughter and a granddaughter that moved back to Nashville, Tennessee. And there seems to be this invisible tether cord between me and my granddaughter, as I refer to as the chairman of the board. And she's the one that always tried to keep me on the straight and narrow, which is a full-time job for her. And when I got back here, I was invited to join an organization called Infragard, which is a public-private partnership between the FBI since 1996 and Homeland Security since 2001. And what we do is we have now over 60,000 members in 84 chapters spread all the way from Guam to Puerto Rico and all through the major cities in the United States. And what we do is we provide subject matter experts in helping the agencies work with various different types of crime, and also working with helping to protect the critical infrastructure. And I did that, I think my last position there was vice chairman of the board and of the national board. And then we had 84 local boards. And I resigned from the board in 2017 or 2018. I feel that when you're most productive, you come in, you share what you have to learn with those that are coming up through the ladder, and then you move on, get out of the way, and let the younger, more energetic people come along, and also usually brighter, especially in my case. So, and for the last couple of years, I've just been kind of laying around looking at different things. And then when digital came along, I became fascinated with it. So that's basically my background, both from a personal and a professional standpoint. So back to you for question number 2.
Thank you very much, Bill. Very impressive resume, and I got to say, I've been privy to have, well, I've been fortunate enough to have a look at some of the work that you've done and some of the recommendations that you've put into banks in your resume, and I was quite impressed with it, which is why, obviously, we are working on this partnership and having you part of the community where you can part with your wisdom for not just us but also the community. So guys, just be on the lookout. Bill will be part of the Slack community. I think you already are part of the Slack community, aren't you? We've already added you, haven't we?
Yeah, I think so.
Yeah.
I'm not sure how to work it yet.
Yeah, we'll help you
I
do
think
that.
Fritz is probably in therapy after working with me the other day. It's but we'll get there. We'll get there. I'm a persistent guy.
That's probably why he's been off for the past week. I'm only
I
joking.
know. I would think so, and he's earned it. I
Yeah.
told him I owe him a case of beer.
Fritz is here. Fritz is here today. He's listening in. So thank you for helping Bill out, Fritz. Mate,
Welcome.
how do you, you spoke a little bit about how you became a banking examiner, but how do you spot a good bank versus a bad bank? When you were working for the Federal Reserve, what were some of the crazy things that you saw some banks do?
Well, how do you spot one? The common denominator ingredient of a good bank is good management, which is the same with all companies. The banking industry, like the legal industry, the medical industry, they use lots of terminology to try to confuse the public. But basically, banking is pretty simplistic. I mean, you got debits and you got credits, and they got a balance. And if they don't balance, you got a suspense account. That's really about it. But the key to good, sound management is the management team itself. Where banks run into trouble is that I saw back in my day was that there was a lot of banks, independent banks being chartered, and most of the management team was coming from the branch banking system, where they had a book that basically told them how to do everything and when to do it and what day of the week to do it. And so all they had to do is know how to read, and they could perform. But when you go into an independent bank environment, you become that book. And so you've got to figure out, you better know what you're doing or you're going to get yourself in trouble. So what we did is, typically when a new bank was open, and there's a long, drawn out and expensive and time consuming process for a bank to be organized and the doors to be open to the public. The key ingredients that we always look for is adequate capitalization, good management, a good sound board of directors that was there for the right reasons rather than putting the final feather in their resume cap, that there was a need for it within the community. And so we would go in usually about 60 to 90 days after the bank is open. We take a look at things and see how they're doing. And some of them would get themselves in the doghouse right off the bat, and seriously so. And we would either have to bring in new management, and or if it was that serious, then we would look for a buyer, which would typically be a regional bank or a larger bank like the Bank of America or Citi or somebody like that. And but banking is about the quality of the assets, and the banking industry is not the consumer's friend. They really aren't. They're in one business, and that business is to make money for their stockholders. Many of the independent banks that come in, they build it up, sell it, make a ton of money on their stock going down the road. Others that would get themselves in trouble, they'd lose their investment. So it's, but the need for a community bank is strong. I took a position back, and I think it was 2008, when we were having as many as 10, 11, 12 little independent banks fail every single month as a result of the real estate crisis back here. And I was interviewed and asked how I felt about that's when the government went to the taxpayers to bail out the big banks, and they wanted my opinion. And I said, no, don't do it. Don't reward bad management. And I said the banks that are really valuable are the community bank. They're the ones that service the community. They're the ones that know the community. They're the ones that have a vested interest in the community. But so I'm a big advocate of independent banking in the communities. But by the same token, when it comes to profits, that's what banking is all about. It's a highly leveraged business, and we'll get into that. I think when we talk about fractional banking a little bit. But so that's kind of the banking. The key to it is just good management, sufficient capitalization, a good asset structure where you've got good loans that are paying off, and when they don't, then they got a problem, and they usually don't stick around.
Yeah, perfect. I love that. And I know you mentioned Citibank and some of the other large banks. Now, and some of the things that we do here at Breakout Solutions, we teach our members about, obviously, and we're going to talk a little bit about digital assets and crypto in a few moments. One of the things that we do speak about with our members is about, there's a lot of, FUD, fear, uncertainty and doubt that gets talked about crypto being used by criminal organizations and that. But one of the things that you always see, some of these larger banks, especially like Citibank, has been in the news quite a bit when it comes to some of their dodgy dealings and working with cartels and things like that. How does that come about? How do they get away with that?
Banking is a cartel, and they have been from day one, really. And when we talk about the Federal Reserve Bank, I'll kind of give you a little history of how that all came about. But banks are motivated by greed. I didn't know that when I first got into it. I just thought we were a business to provide a service to the community. But the farther I went up the ladder, the more I became familiar with what the real game plan is. I'm a guy that believes in the need for banking, but I also believe in fairness, and it's just not there. And which is why I left the banking industry and years ago is they just, when they can take $100 of your money and set aside $10 and make and pay you 1, 2, maybe 3% on that $100, and they'll take the other $90 and loan it out at 25 or 30% or whatever. Whether it's a car loan, a personal loan, and a real estate loan, or whatever it happens to be. Is that smart? Yeah, of course it's smart. But it's hurt this country, and that's part of why we have, and I think other countries as well, is why we have the shrinking middle class, and we're winding up with a whole bunch of folks in the bottom end of that barrel, and very few but very wealthy people at the top end. And I think that's where, and I'll talk about it when we get to the digital, but I think that digital is A, long overdue, and B, it's a great competitor for the whole banking system. It's an equalizer. It gives everybody an opportunity to better their living environment and their circumstances for them and those that they care about. And that's what I love about it.
Yeah, I love that. And I think, we're definitely seeing that. I think you mentioned, we're going to speak about fractional banking system in a moment, but we're seeing this like right now in Australia. We've had, I think, like 3 months of consecutive interest rate hikes. We had like 50 basis point go up a couple of days ago literally 2 days ago. But the funny thing is the banks are so quick to pass that over to the borrowers, but not so much to the savers. Very few banks have actually increased their interest rates for savings accounts. But for anybody that's got a mortgage, they pretty much get hit with the full interest rate hike instantly.
Yeah, I often thought if I was ever going to invent anything, I would invent a way for the consumer to pass the buck on. It seems like it always stops with us.
Yeah.
You're absolutely right. I mean, what's happening with the the Fed right now in our country is that real estate affects more industries directly and indirectly than any other industry in the world. When you think about it, it's not just the loan and the mortgage and the house, the builder, the Home Depot where they get supplies and fix their fence and their plumbing and stuff like that, and the salaries that roll over 7 times in the communities. It's amazing, and we've seen rate hikes here of almost 3 points since the first of the year in 6 months. And the Fed thinks that's the answer. I disagree. You can't hurt that many industries and it'd be a good thing. It's the interesting thing about the Fed has 3 vehicles, and let me see if this is a real test, see if I can remember them. They have the hidden tax, which is inflation. They have the justification for things like the pandemic to raise prices on things. And then they have wars. I think everybody has probably heard the expression that wars are profitable. Well, they're profitable for everybody, but the average guys like us. But inflation, think about it, that when a gallon of milk goes up, so does the tax attached to it. There's a great book that was written by a guy by the name of J. Edgar Griffin, and it's called The Creatures of Jekyll Island. And it really lays it out. If you want to understand banking and the Federal Reserve, you'll have to get a carrying cart to carry it out. It's about 500, 600 pages. But the good part is at the end of each chapter is a summation of it that you can read that and have a real good feel for it. But this guy really nailed it. He figured out this hidden tax that's placed on the whole world once it happens. And that's the way they generate their additional income, is with these sources. So I'm not a big fan of the Fed.
We'll talk about the Fed in a few moments. And look, I have heard of this book, The Creatures of Jekyll Island, and I've been meaning to at least, 500 pages, probably something I'm not going to read, to be quite honest, unless I get an audio book. But I'll definitely look into it. And that book, it speaks about a meeting at Jekyll Island where they actually started the Fed Reserve or something like that. Yeah,
that's right.
Yeah, right.
Jekyll Island is right off the Georgia coast, and there was several of the banking families, the Rothschilds, who else was there? The Morgans were representative. It's interesting. When I was a kid, I think it was a freshman in high school, I lived in Albuquerque, New Mexico, and for one summer, Morgan's great grandson and I chummed around. And a couple other buddies, but I didn't know who he was or anything about his family. We're just, but up to 1910, banking industry was really the wild, wild west, and they could do pretty much what they want. Well, the government realized that they had to put some kind of controls. Typically, what the government always does is a knee-jerk reaction where they will overcompensate, as they're trying to do with digital right now. So the capitalist families that came over from Europe, and most specifically England, there was a representative, there were 7 people that are the creatures of Jekyll Island. They were a representative from the Rothschilds, from the Morgans, another banking family, through a couple 3 politicians, and then a representative from the Bank of England. And basically what they did is they structured the model for the Federal Reserve as we know it today in this country as our central bank, and many other countries that have followed suit along with it. And what they were pretty smart. They said, look, we don't want them to set up the regulation. Let's set up the regulations. So the Fed has a central bank in Washington, D.C., and then they have 12 regional banks that are spread from coast to coast in the United States, from San Francisco to New York City. And each of those have a board of directors. And their whole purpose, in Griffin's opinion, and I agree with him wholeheartedly, is control. It's how the very, very few can increase their wealth at the expense of those that don't have it. And we've seen it time and time again in this country. And right now, it's probably about as bad as I've ever seen it.
Yeah, and I think that definitely correlates with what we talk about, which is the controllers are the ones that control the governments and the banking systems, and it's those people behind the scenes that we don't know about. And I'm definitely I think they should make it. I haven't read the book, but they should probably make a movie about the creatures of Jekyll Island. But definitely something I'll be looking.
They should indeed. They should indeed. Yeah. Yeah.
So since we started talking about the Federal Reserve and how it's formed, tell me more how that affects our everyday life. And then we'll go back to the fractional banking system, because I know that's supposed to be the next point we talk about. Well, we've jumped ahead now. So let's go into a little bit more about the Fed and, how the formation of the Fed. So do you want to give us a bit more detail about that and how it actually controls everyday people through the formation?
Okay, it was formed pretty much as the foundation for it started at Jekyll Island, and as I mentioned, there was politicians there, so basically they took it back to Washington, was funded by the Rothschilds and the Morgans, and they drove this legislation to fruition, and it's remained basically the same since 1913, when the Federal Reserve Act was enacted. But here's the biggest damage that it's done. In 1913, the U.S. dollar was worth $1. The last time I looked before 2020, it was worth about 5 cents. Now that, in my opinion, is not particularly good management. When you've depreciated an asset by 95% over 100 and X number of years, but where it's affecting us on a daily basis is we're having to pay more on everything. Think about the first car you ever bought, and think about the last car that you just bought, and it's essentially the same car. A little more computer, a little fancier, but it's essentially the same thing, and that's where they've done it. And to me, it comes down to the control factor, because the wages haven't kept pace with it, so people are struggling. You've got mom and dad that's working from sun up to sundown to take care of their family. And then we have an educational system in this country whereby, if a kid goes 4 years of college, they're going to spend $80,000-$100,000, and it takes them a long time to get that back. A long time.
Yeah.
So it affects us everything, whether it's at the gas pump, at the market, whether we're buying a new car, whatever it happens to be. The dollar has gone down, and consequently the cost of things have gone up, and we have to work harder to achieve those things that we want in life, whether they're just normal things like food, transportation, vacations, whatever.
Yeah. And I think we did a coaching session early on this week around the history of money, and one of the things that was worth noting was that since Nixon removed the backing of the gold from the dollar back in 1971, what we saw was productivity kept going up, but the remuneration to people getting paid for that productivity doesn't keep up. And prior to that, there was a correlation between productivity and wages. So we're definitely seeing that. Like, I remember when I grew up, my dad, my mum could stay at home, especially when he came out to Australia. My mum, she would stay at home and my dad would go to work, and, he would provide a normal life for us. But today, I don't know many families that can live on a single income. I know even my family, we need a double income to be able to provide for our kids what they need and have the life that we want to give them. So I can definitely see that, and I agree with you.
I think their game plan is to keep mom and dad so busy that by the time they can't challenge the government on what they're doing.
Yeah. Now we did touch a little bit on the fractional banking, so I'd like to go into that. Then we'll have a quick question. We'll get your views on crypto and digital assets, and then we'll open it up to the members for their questions. So, guys, if you do have questions, please start putting them in the chat, or if you do want to speak, put your hand up, and we'll get you onto the screen. So, tell us a little bit more about the fractional banking system, and from your understanding from when you were at the bank and how it works.
Well, I touched on it very, very briefly early on, and it's leverage. It's all about leverage. When you think about fracturing something, you're breaking it up. And what they're doing is for every one of those dollars that are coming in, they've only got to set aside 10 cents of it, and the rest of it they can put to work. And if you take and figure it out on a computer, that if you make even 3% on $1,000, it's 3% annual yield, versus banks get paid on a daily basis. Now they call it annual percentage rate, but they get paid for every day. You think about a real estate loan, for example. It's horrible. You buy a house and you're spending 3 times as much by the time you pay it off in 25 or 30 years. And that's their big game, and that's how it hurts us. I heard recently, in fact, I was on a phone call, I've been approached by a group that is trying to raise $5 trillion. All I know is that's got a hell of a lot of zeros, but it's for a good cause. It's 4 times in this country we've developed what we call a infrastructure bank, and it started with Lincoln after the Civil War, and it's raising money to restore the country. Well, our country, its infrastructure has fallen apart. And so these people want to raise it, and and I'm honored to be a part of something like that. I don't really know what their game plan is yet, and I don't know much about them. But one of the people, I was on this conference call, one of the people was a lady that she started what they call the public banks around the world. And there's 25 of them in existence, 3 in this country. I think there's 2 or 3 of them down there in Australia. And it's really an interesting concept, and it's way more fair than the banking system that we traditionally know, in that it benefits 100% for the community. The money comes into the bank from the community. The profits go back out into the community. And to me, I've been trying to get a hold of this lady to find out more about her model, and if it's what I think it is, I think it's a tremendous concept. What I don't understand is after so many years, we've only got 3 of them in this country, other than the fact that I'm sure that the institutional banks don't want them around.
Yeah, and I think, go on.
Go ahead.
Yeah, I think you mentioned, like, with the banks getting the interest rates that they get on a daily basis. And I was reading once that, at the end of the day, the banks, whatever extra cash they have, they send that over to the government and they get a cash rate overnight on that. And that is never, ever passed on to any of us.
No.
Yeah.
That's called Fed funds, where you basically you have X number of dollars, and you get a yield on that. it never really leaves your books other than from a bookkeeping entry. But the Fed, now state banks are not required to be members of the Fed. National banks are required. And let me back up for just a minute. The way that the Federal Reserve Central Bank is funded, they sell stock to the 12 regional banks, and the 12 regional banks sell their stock. The way they raise their money is they sell their stock to all the institutional banks in their area. So they made money on the sale of the stock, and then they take that money and put it out into the public, whether they do it like we're giving away money here right now. So it's just the best way I could describe it. It's a very one-way street.
Yeah. Thank you very much, Bill. Look, I'm just going to quickly ask you about how you feel about digital assets and cryptocurrencies. I know you've come to us, and we're working with you, and giving you education and helping you onboard some of your funds into crypto and whatnot. Which is, I'm honored to be able to help you and have you part of our community. But I wanted to get an idea of what made you interested in cryptocurrencies. Someone who's been in the banking world for so long. I find most of these people aren't very open to crypto, but obviously, you're a forward thinker. So what made you open to cryptocurrencies and digital assets?
Well, to be perfectly candid, I don't like the Fed, as I've mentioned before, and I've always thought there's got to be something better. And digital, to me, while it's got its problems, but you got to keep in mind how young it is. I mean, this is really a young industry by comparison, compared to even the Federal Reserve and other countries around the world and their central banks systems. But the thing that I love most about it is what I said a few minutes ago. I think it's a level playing field where anybody that's got a few dollars can invest it and change their life forever, not only for themselves, but for generations to come. And you can't do that with our banking system. You either have it, unless it's some app or something like that. But to me, it's a miracle that's long overdue, that gives everybody an opportunity to change their lives and for the lives of those that they care about. And it's beyond the tipping point, as Michael said when he and I were chatting, and it's here to stay. Does it have problems? Yeah, it has problems. What makes me think that it's going to make it is most of the governments are making it very, very difficult. A lot of bad press on it. But people just have to do their homework and ask themselves, what other options do I have? And that's the way my family and I look at it. We said, well, life's been good to us, but we've had we've taken it on the chin a few times. And when I do it big time. So it takes me a little while to recover. But I saw this a couple of years ago, and I said to my bride that, we could materially change our lifestyle for whatever amount of sand that we have in the top of our hourglass. But more importantly, we could build something here that we can not only bring our kids into and be a part of now, but also something that we can leave behind in generational income with the wisdom to manage it properly. Whatever, to me, I think the problems that are going on right now it's like any industry. There's a lot of criminals out there, but they come and they go and they get caught. And I was in the meeting with the former director of the FBI. Oh gosh, back in 2017, I guess it was shortly before I left the board. And somebody in the audience asked him, they said, what are the three things that keep you awake at night? He said, terrorism, international terrorism, domestic terrorism, and internet fraud. And that is a big problem in this industry, but it's a big problem in the financial industry as well. And we'll get through it. You know, I think there's some smarter people, and what you guys are doing with your community is teaching them what they've never ever been exposed to before. When I went to school, and I think I mentioned I took a different path. I didn't go to college, probably should have, but I figured out how to drink beer and not go to college at the same time. But they don't teach financial education in this country, and that's by design. They don't want you to know. They just want you to blindly go through life and accept things that they give you, and they give it to you like they're giving you a big gift. Well, is digital a risk? Absolutely. So there's where education comes into the picture. That's where being with quality people with integrity, people that are doing it for the right reasons. That's why I seek you guys out. I talked to Anna, and who I have a tremendous amount of respect for, and she recommended you guys. I didn't know you from Adam, but I did my homework before I came to you, and I said these people have the integrity, they have the wisdom, they have the mission, and the mission is to change the lives of 1 million people. Well, that's not big enough. I want to change the lives for the whole world. At least give them the option. Now, if the folks are, I've got a good friend. I was talking to him earlier today. He and I sat on the Infragard board together, and he's a retired colonel that spent 8 years in the White House. This guy is really, really smart. He's an IT genius. I needed him alongside me when I was talking to poor Fritz the other day. And but he doesn't believe in it. He just thinks it's all a big sham. Well, I think there's going to be a lot of people a few years down the road here that are going to say, damn, I wish I'd have gone on board. I wish I wouldn't have been so skeptical. Life is full of risks. When I was a real estate developer for 20 years, that's one of the biggest, highest risk businesses there is, because you spend thousands and thousands of dollars and a lot of time before you ever know if you have a project. And if you do, you got a home run. If you don't, you lost it. So I believe in digital. There is so much that I don't know about it. And that's why I've come to you guys, because I think I will learn from everyone that's on this call tonight in this community. And I just want to extend an invitation. If anybody wants to reach out to me, Wasim's got my contact information. I'd love to meet you. I'd love to talk to you. And if I can help you in any way on any of the subjects that we've talked about tonight, happy to do that. Happy to do that. I guess my mission is to change our family's life where I'm not dependent upon the banking system or the federal government or anybody, but sound investments for myself, my kids, my grandkids, their kids. And I want to help spread the word because I believe in it. And to me, digital, we used to have in some of the companies that I've been fortunate enough to run, we had what we called the level playing field, where we would come together once a week or once every 2 weeks or stuff like that. And we throw this imaginary mound of clay on the table, and everybody would have an imaginary finger bowl. And then we would say, okay, from the last meeting, these are the problems that we have. We clearly clearly identify what the problem is, and then everybody around the table, whether they were the janitor or the chairman of the board, they all had an equal say, and that's why we called it the level playing field. And it was so exciting because we would solve these problems together. And that's the way digital. There's some really, really incredibly bright people that are dedicated to this, and it goes way beyond greed and making money. It's because they believe in this is the future.
Yeah.
And the second thing that we get out of our level playing field was that you would, about the second or third meeting, we do the same thing with things that we're doing well. We say, well, how can we do them better? Throw another mound of clay on the table. Okay, let's figure out how to do this better, give better service, do whatever we're doing, but let's do it better. Perfection. But the real advantage to me, besides the obvious there, is that about the second or third meeting that a new key person to the team, you'd see their eyes light up. And all of a sudden, they came to the realization that we cared about what they thought, and we respected the knowledge that they brought to the table. And what you're doing is you're developing leaders to take your chair at the end of the table. And that's what life's all about. That's what raising kids all about. It's exciting. I love a challenge. I love excitement. I love being a pioneer. I want to learn as much as I can about this and spread the word, help spread the word.
Thank you.
Long answer. Sorry about that.
No, thank you. And I think I love that because financial education and financial literacy is so important. And we're seeing, what I love seeing is some countries, even like El Salvador now, are starting to put that into their high school education. And we spoke a little bit about that earlier on this week. Bill, thank you very much for all of that. Guys, if you do have a question, please raise your hand. We're probably going to maybe 5 or 10 more minutes to ask Bill any questions that you guys have. Hussein, I know you've got a question. Did you want to come on? The camera, mate? Turn your camera.
Yes. Yep.
Let me just remove the spotlight. Let me just change the view. Good to see you, Hussein, as always. Bill, Hussein is one of our members, and I'm in another group with Hussein, and he's very, very knowledgeable when it comes. He has a big interest in the financial world, and I know he goes on some other podcasts and things like that. So he's also quite knowledgeable. So I'd be very keen to hear what questions he's got for you.
Thank you, too kind. Thank you, Bill, for your time. I just had a question or two in regards to the banking model that you were talking about earlier. We've got something similar here in Australia with a credit union model, where basically the credit union is not quite a bank. It doesn't have access to the leverage that a traditional bank has, but it's limited by the number of members and its balance sheet. So it can go on and use its balance sheet to lend out to other to borrowers. But obviously it's at a disadvantage because it doesn't have access to central bank liquidity. And that's what I want to ask you about, your opinion on central bank liquidity, and does fractional reserve banking really matter anymore? Because the amount of liquidity provided by the central banks supersedes the need for deposits on a bank balance sheet these days, where they can just get an unlimited supply of liquidity and lend out to unlimited amounts. So the only thing restricting current banks now would be their risk appetite.
Yeah.
So
yeah.
Your opinion
and
on
that
that?
appetite seems to be getting bigger all the time, because most corporations they're faced with an annual the annual stockholders meeting, and the stockholders want to yield on their investment. But yeah, we have credit unions here in this country, and they've always they were usually a captive credit union where, excuse me, I should have brought a glass of water in. Like you'd have the naval credit union, only for naval employee service people and their families and stuff like that. I'm a member of USAA, which is a military for all the military services. But yeah, they're at a little bit of a disadvantage. But I've found over the years that they do two things that are really good: is they give better personal service than the traditional banks, and they're more community oriented than because I think most of the credit unions here in this country saying has opened up their doors, or basically saying, like, when I first joined USAA, my in-laws were, but it was only for military officers and enlisted men. Now it's open to everybody. They could, their kids' babysitter almost. And so but they do provide they provide all the services the bank. They just can't do it on the expanded basis because they don't have the liquidity. They operate pretty much on their deposits that come through the door, where the Fed, when they print money and send it out to the banks, it's not backed up. Well, Steve mentioned back in 1980 when Nixon we went off the gold standard here, one of the biggest mistakes ever made. He made a few others, but the going off the gold standard, because there's absolutely nothing tangible backing up the US dollar, and it hasn't been since 1980, except the good faith of the United States government to honor it. That good faith sounds good, but what it's based upon is the tax revenue that they get from the everybody lives here in this country that pays taxes or inflation. So yeah.
I've noticed, like we've all noticed, I mean, we're all quite young, but the one thing we've noticed in our short lives is the debasement of our currency. I mean, we all remember our parents buying homes when we were younger for a fraction, literally a fraction of what they are today, or being able to fill the trolley in the shopping centre for a fraction of what we're filling it for today. And that stems from our understanding now the debasement of the currency, which is the ability of the central banks to create liquidity out of thin air. Now, I have another question. My question is, what other suggestions would you have as an alternative to the central bank system? So would you see a role where the Treasury itself, the government itself, could be responsible for the creation of currency? And it would be obviously limited by its balance sheet because, it's tax collection. Because if it was to go and become a cowboy like they are today, it would affect the value of the nation's currency. So it'll depreciate the dollar, for instance, if they were to, just create too much. Do you see a role there for like the Treasury taking over the role?
That is an incredible question. And a thought-provoking question. I'm going to answer it in kind of an indirect way. First of all, I'm not sure I have the answer to it, but I'll tell you where I think they're going. I think that the government, our government, is going to go to a digital type of coin. Because if you think about it, in 1913 it was worth $1. Now it's worth maybe 3 cents. What happens when it gets to zero? What are they going to do then? And I think the way they're going, and they are talking about it, they're not publicizing it. You can bet your boots that every politician in our country has got their fingers in digital, and one way or another, and in certain amounts of diving in up to their knees or up to their eyebrows. But it's here to stay. I think the dollar is going out of business. There's nothing to back it up. So that's my suspicion, is that we're going to go to something. It's going to be I want to say hybrid, but I don't think that's quite the answer. I don't know the answer. It's just a feeling that I have that when something falls clear down to zero, then it's of no value anymore to anybody or anything. So they've got to substitute it with something. And the most logical thing, and regardless of fluctuation that we're seeing, I think that's by design. The biggest thing I like to see is people like Elon Musk and others, if they did this, if he did what he did, he's doing it with digital in the stock market, he'd probably go to jail. I'd like to see that stop. I think some realistic regulations need to be put in place, but I think that's the direction. At least it's my opinion that's the direction we're going to go. We're going to come up with some sort of a new currency, whether it's a coin, what it is, I don't know, but it's going to be way closer to digital valuation than it is a dollar valuation in our country, at least.
Yeah, you would think in the Western world that they'd come up with something that'll be able to hide inflation better than the current system, and digital would allow them to create a form of currency that hides inflation because it allows the use of behavioral economics, right? So and
you would think so.
Yeah,
you would think so, but.
Yeah. All right. Thank you, Bill. Thanks for those.
Thank you.
Thank you.
Thank you, guys. Thank you, everyone. There's no more questions. We've gone a little bit over time, but it's still good. For those of you that haven't, that have registered, obviously this will be going up onto the portal in the next 24 hours. There's no more questions, guys. Thank you very much, Bill. I appreciate you taking the time. I know it's getting quite late over there for you in Nashville, United States. Welcome to our community. You are part of the Slack community, guys. So, keep an eye out for Bill. He's very open to being reached, for you guys to reach out to him. If anybody wants to reach out to him or wants to speak to me first, please feel free to do so. And again, big thank you, Bill, for your time and your knowledge.
Well, thank all of you. I appreciate you, because time's our most valuable asset. And I try to respect it for other people. You got a great community here. And again, I sure look forward to at some time and some place we all get together. We will. I'm looking forward to coming over to the US hopefully sometime soon and seeing you. All right, guys. Thank you. Take care. Have a great morning. Evening. Take care, all. Bye-bye.
Thanks, Bill.
You bet.
Thank you. Bye.
Bye-bye.